This is the Asia Trade. I'm Shery in Tokyo.
And I'm Paul Allen in Sydney. The top stories this hour. Asian stocks set for gains with dip buyers emerging after a pullback in AI names. Bonds falling as US hiring and services activity expand. The Trump tariffs could be on shaky legal ground, with key Supreme Court justices suggesting the president may have overstepped his authority. Also ahead, Hong Kong set for a robo-taxi rumble. Rivals WeRide and Pony AI begin trading after claims of misinformation and pitches to investors. Plus, we speak exclusively with Robinhood CEO Vlad Tenev after third quarter profit beats expectations, but cryptocurrency revenue falls short. All right, we're just open for trade here in Australia this Thursday morning in Sydney. Let's take a look at how we're tracking in the early going. A little bit of strength for the ASX. We're better by about 0.4%. Quick word on NAB shares as well. This is National Australia Bank just out with full year earnings. They're better by 1.5% as well. Full year cash profit, a slight miss, $4.6 billion US. They're an 85 Aussie cent dividend. Net interest margin also ticked up a little to 1.74%. So the market liking that news. NAB shares a little bit higher in the early going, about 1.5% now. Got to look at the Nikkei though. Looks like we are setting up for a slight recovery after yesterday's sell-off. We were off 2.5% on Wednesday after that tech-inspired sell down. We did see dip buyers emerging in the US. It looks as if we're going to see the same sort of behavior taking place in Asia today. The yen still pretty weak, 154 at the moment. We did hear from Japan's top currency official Atsushi Mimura saying recent moves in the yen have deviated from what you might normally expect, especially considering the US is looking at easing while Japan's looking at tightening as well. We'll bring you more on the yen in a moment. Shery.
Yeah, we had a little bit of a bump on the Japanese yen as we heard those comments from Mimura-san. But take a look at the South Korean current account balance now widening for the month of September. Also, the goods trade balance widening to $14.245 billion. Of course, despite the strains coming from the U.S. tariffs, we have seen South Korean chip makers really expanding its shipments abroad on that investments around artificial intelligence. Something that has, of course, raised concerns about valuations, especially in the United States. But this, of course, coming at a time when we had already seen that pullback on those chip makers. Take a look at how they traded in the overnight session, because we saw those resumption of gains, some dip buying, as Paul just mentioned, after that big tech sell-off. But also, we saw the Russell 2000 of small firms adding to those gains, given that the U.S. Supreme Court appeared more skeptical about President Trump's global tariffs. So could those tariffs be rolled back? That would help some of those smaller importers if the Trump administration is forced to carry out some refunds when it comes to those levies. We're also following treasuries. Paul mentioned some data, U.S. services activity expanding at the fastest pace in 8 months. We also had the private sector job growth boosting treasury yields. We have been watching supply in the treasury sector very closely, because now we had the Treasury Department saying that they would not look to boost sales in its quarterly refunding statement. We have seen that when it comes to funding those budget deficits globally, global bond sales have soared to a record this year. It's not just being governments. We're talking about the issuance being dominated by financial institutions and setting now a new annual record of $5.94 trillion, Paul.
All right, let's get to Garfield Reynolds now, who leads our Markets Live Asia coverage. So, Garfield, rebound seems to be the theme of the day after the selling that we saw on Wednesday. But, I mean, has anything actually changed around this broader AI bubble risk narrative?
Not really, Paul. In fact, we actually saw something of a rebound starting in the afternoon yesterday in Asia. Yeah, at one stage, the Kospi was down 6%. I think it closed down by less than 3%, which, I was sort of saying at the time, if you just come in and seen what Asia did by the end of the day yesterday, you would be alarmed. If you had gone away halfway through the Asian day and came in at the end of it, you'd go, oh, that's a nice little rebound. So I think that speaks to precisely the fact there weren't any real triggers that said, oh, this is the time, when the fundamentals behind this rally have become unpinned. We didn't have some big profit misses or some big warnings. We had a little bit of an increase in the angst meter when it came to what some Wall Street CEOs were saying. Palantir's earnings simply reminded everybody just how incredibly overvalued it is. So it was a sort of a bad vibe, as it were, but the lack of any strong fundamentals behind it made it very likely that we were going to get this sort of dip buying.
We've been also watching the Treasury space very closely when it comes to those bond supplies out there. And we're now getting data that global bond sales have surged to a record high. This seems to be a really global phenomenon where that borrowing spree continues.
Yeah, the borrowing spree is quite extraordinary, and one of the more extraordinary parts of it too is that there's so much demand. There's, by some reckonings, $74 billion of cash sitting on the sidelines that would like to go into bonds but can't find a way into it. So that speaks to the idea that these sales are going to continue. It probably helps that we do have the Fed in an easing cycle. Central banks mostly are moving towards being more accommodative, even if that's slowed down amid some concerns about sticky inflation. So for all of the worries that, and I was definitely somebody who was very worried about the idea that Trump's tariffs were going to severely disrupt global growth, we're not really seeing that, which speaks to that appetite for debt. It also speaks to companies' willingness to sell debt, and it says that when governments in particular want to sell debt, they might have to pay a little bit more to borrow. Hence, you've got a bit of an uptick in yields in the US and elsewhere.
Garfield Reynolds leads our Markets Live Asia coverage with a view of the markets. We're also following the U.S. Supreme Court signaling skepticism of President Trump's global tariffs, with key justices suggesting he had overstepped his authority.
The vehicle is imposition of taxes on Americans, and that has always been the core power of Congress. So to have the president's foreign affairs power trump that basic power for Congress seems to me to kind of at least neutralize between the two powers, the executive power and the legislative power.
Let's bring in our senior editor, Derek Wallbank. And Derek, what gives this more weight is the fact that these voices are coming from the conservative majority in the High Court.
Look, any conversation about the Supreme Court really does need to start with the fact that there are 6 justices that were appointed by Republican presidents, 3 of whom were Trump himself, compared to 3 Democratic appointees. Now, that this court was somewhat skeptical of Donald Trump's administration's broad argument that he has the right to levy the sort of aggressive tariffs that he has gone and done for the reasons that he has laid out. That is a point of challenge, is a critical point of challenge to the biggest economic agenda item for the president in terms of foreign affairs. It is no stretch to say that Donald Trump has reshaped global trade entirely with his aggressive tariff moves, a lot of which, not all, but a lot of which would be unwound if the Supreme Court broadly found that he could not do that. That creates a difficulty that it is hard to explain in short words here for the U.S. government if this were to be wound down. Our Laura Curtis did a great story on this in October, but the short version is you're talking about forcing potentially more than $100 billion in refunds. There is little system set in place to be able to do that. You could be talking paper checks that could take weeks to months. Now, a decision in this case is not necessarily expected today or tomorrow or anything like that. This is something that could take weeks to months, potentially before the end of the year, but the Supreme Court never really targets exactly when the case is going to come to resolution. So it's very much a stay tuned, but a stay tuned with potentially mega effects across basically everything that's tradable.
Derek, on the subject of endless timelines, the US shutdown, day 36 now. This looks like it's going to start impacting air travel. What more do we know?
Well, Paul, yes, we're at a record right now, and we have seen some pretty fantastic delays at major airports across the United States. We've seen ground stops at major airports on and off over the last couple of days and weeks. What we're hearing now is that the FAA is making plans to broadly have a 10% drop across some 40 major airports. What that will look like, who's going to be affected, where those 40 airports are, we don't yet know. That's apparently something that's going to come out later this week if we don't have a resolution to the shutdown. We are hearing, some noises in Congress about certain lawmakers talking with other lawmakers trying to figure out what the end game may be, but that doesn't sound like that's necessarily imminent right now. And look, Paul, if you're in the U.S. travel market situation, you are coming up in a couple of weeks to the Thanksgiving travel schedule. It's one of the busiest times for airports, and so this genuinely could not come at a worse time. One quick thing I will give you, though, the House bill that's been under consideration, been rejected by Senate Democrats more than a dozen times, it only funds the government to November 21, and so at some point that runs out of being a useful vehicle, and they've got to start over anyway.
Derek, President Trump speaking right now on a Fox News interview saying that he watched last night's election results very closely. He was disappointed in what happened in New Jersey. And of course, we're watching that historic victory in New York as well. Take a listen to what he had to say earlier.
We lost a little bit of sovereignty last night in New York, but we'll take care of it. Don't worry about it. And now let's see how a communist does in New York. We're going to see how that works out. And we'll help him. We'll help him. We want New York to be successful.
Of course, he's talking about Zohran Mamdani's a big win in New York. But President Trump seems to be a little bit of backtracking when it comes to those criticisms that he sent Mamdani's way before the election.
Yeah, let's see where he winds up landing here. I mean, look, everybody knows that Donald Trump, even though he's living in Florida now, he's a New York guy at heart. He's got a long history in that city, and he's got a lot invested there. Now, Zohran Mamdani absolutely took aim at Donald Trump by name repeatedly during his victory speech. We saw a very broad rejection of the president's allies across elections nationwide yesterday. I was looking at the returns very, very closely in New Jersey, where Mikey Shery won by a lot more. The Democrat won by a lot more than people thought she would. A lot of that win was anchored in northern Jersey, where there was a lot of anger toward Trump cutting off some Democratic-backed projects, including the Gateway Tunnel that would help Jersey commuters into New York City. And so already some aspects that the administration has done to try and get at New York have come up and had negative political consequences. Let's see what he does here. I think this is going to be a challenging relationship for both sides, and it's something to watch very closely going forward.
All right, Bloomberg senior editor Derek Wallbank there in San Francisco. Coming up on the Asia Trades, in a few minutes we'll speak exclusively with Robinhood CEO Vlad Tenev as the online brokerage reports a 270% profit surge. Also later, Julius Baer explains why they don't see a big correction coming for stocks. Much more ahead. This is Bloomberg.
ARM gaining ground in the extended session today. It gave a bullish revenue forecast. It's seeing interest increasing in designing chips to run AI data centers, so it's reporting strong demand in that sector. Not to mention revenue from its Neoverse product used in computers also doubling. So the fiscal third quarter revenue will be about $1.23 billion. And we have seen in the overnight session on Wall Street chip makers jumping as well. Remember, we had that tech pullback on concerns about valuation implications, lots of questions on whether we're in an AI bubble. Let's bring in our Asia tech correspondent, Annabelle Jewellers. And Annabelle, we even have now the OpenAI CFO weighing in.
Yeah, and you can imagine, I guess, which direction she went in, because certainly Sarah Fry, she was speaking at a conference from the Wall Street Journal with the Wall Street Journal, and very much pushed back on this notion that we are seeing too much exuberance in the market. In fact, she actually said that investors and people need to be more optimistic about what AI can do for us, or do for us not just as enterprises but as individuals moving forward. And so she thinks that there's really a lot of applications, practical applications, that haven't been accounted for just yet. The scrutiny, of course, has also been on the types of deals that we're seeing in the market, and OpenAI has been very much at the forefront of this, making blockbuster deals with the likes of Nvidia, for instance, AMD, and this concern that maybe we're seeing too many circular deals taking place as well. But who are the true beneficiaries of that? And is it sort of overinflating as well and leading to these concerns around the AI bubble? She essentially said that building out infrastructure is necessary, and it is just about bringing more compute into the world. Listing plans also came up into this conversation as well, but she said an IPO is not being pursued right now, but it is certainly something, of course, that has been discussed for the company for a period, but certainly seems like it's still quite a few years away.
Belle, Jensen Huang has also been speaking, talking to the FT about the AI race between the US and China. What's he saying?
Yeah, it was quite a stark warning, really, from Jensen Huang. I mean, he's been someone who's been very much at the forefront of trying to push this notion that the more you restrict China, the more you will aid its rise. And that has been sort of his big complaint, as you saw, of course, both the Biden administration and then also the Trump administration looking at ways to restrict sales of its most advanced technology to the mainland. But essentially, Jensen Huang, as you said, he's given an interview to the FT, and he said that China will win the AI race. So quite strong language there. The reason he's saying that actually comes down to energy, and it's an interesting comment that he's making because, of course, China as a country is built up relatively low energy costs for companies there, businesses. And what's happening, or what the FT has been reporting actually, is that as Chinese companies are asked by Beijing officials to move on to Chinese-made semiconductor chips that are more energy intensive, there are more subsidies that are being put in place to bring down their energy costs as well. And that's where Jensen Huang says that they're able to gain some sort of advantage, and one of the things that he is most concerned about.
And robo-tax is, of course, one part of artificial intelligence and the boom there in China. Very big, and we have two big listings in Hong Kong.
Yeah, that's right. So Pony AI and WeRide, you sort of think about the trilogy of the three biggest names in China. Well, these are two of them that are going to be listing in Hong Kong today. There's actually very intense competition between these two companies in particular. So it's very notable that they're going to be listing at the same time. But yes, we've got WeRide, Pony AI coming up. So Pony AI has raised substantially more funds, really, $863 million US. In terms of the amount of interest in this, well, the retail portion is definitely more subscribed, so looking around nearly 16 times subscribed. Retail portion around 7.5 times subscribed, but the listing price at 100 or near 140 Hong Kong dollars a piece for those shares. WeRide as well, as I said, it's raised less in its listing. These are both secondary listings, of course, but around the $308 million, that's US dollar mark. They're planning to use those funds to continue their global expansion, because that's really what we see from the Chinese robo-taxi names, as opposed to what you see from names like Waymo in the US that are more focused on the domestic market. Chinese companies, as we've been discussing, Shery, you know, are very much focused on that international rollout.
All right, Bloomberg Asia Tech correspondent Annabelle Jewellers there at the Hong Kong Exchange. Well, let's get the latest now from the corporate front. Apple is said to be planning to use an ultra-powerful parameter AI model developed by Google to help overhaul its Siri voice assistants. The sources tell us the two companies are finalizing an agreement that would see Apple pay roughly $1 billion a year for access to Google's technology. Apple is aiming to use the Google model as an interim solution until its own models are powerful enough. Qualcomm has given a bullish forecast for this quarter, saying sales would be roughly $12 billion as demand for high-end Android chips remains strong. The chipmaker's profit took a hit last quarter from a US tax change, resulting in a net loss of more than $3 billion. The company is working to transform into a more diversified seller of chips for cars, PCs and data centres. National Australia Bank's full-year profit narrowly missed expectations despite growth in its key business and private banking division. Cash profit dipped 0.2%, even as key units posted solid growth. The CEO, Andrew Irvine, says the bank is focused on boosting deposits and home lending as it heads into the new fiscal year. After a bright start, NAB shares now off about 1.3%. We have more ahead on the Asia trade. This is Bloomberg.
You're watching the Asia trade. These are some of the stories that we're following. China is rolling back tariffs on U.S. farm goods and lifting export curbs on American firms. It moves tied to a new trade pact with Washington. The finance ministry will drop levies on soybeans, corn, wheat, and chicken starting November 10th. Beijing is also removing 25 companies from its trade control lists after the U.S. eased its own tariffs on Chinese imports. Bloomberg's been told that Cambodia will store part of its gold reserves in China, becoming one of the first nations to use Beijing's new bullion vault in Shenzhen. The deal marks early progress in China's bid to challenge Western dominance in global gold storage. Cambodia's central bank holds about 54 tons of gold, roughly a quarter of its $26 billion in foreign exchange reserves. President Trump appealed to China's Xi Jinping to free Jimmy Lai during their meeting last week in South Korea. This according to a report by Reuters. Although Trump didn't discuss a specific deal, he reportedly spoke about concerns around Lai's health and that he would use an upcoming meeting with President Xi to push for the release of Jimmy Lai.
All right, let's take a look at how some key assets are tracking at the moment. We have been open for trade here in Australia for about 25 minutes, seeing a modest rebound after yesterday's selling. We're up about 0.5% on the broader index at the moment. National Australia Bank shares, after popping at the open, now off about 1.1% after full-year cash profit slightly missed expectations. We do see Nikkei futures kind of flat at the moment, but we are anticipating something of a rebound today in the Asia-Pacific, some dip buying after some of the heavy selling that we saw yesterday. We'll also be keeping a close eye on automakers as well. We did see Toyota shares dropping after profit guidance disappointed. US tariffs there pretty clearly weighing on the bottom line. The weak yen also catching the attention of a number of officials in Japan as well, not just the finance minister, but also the top currency official Atsushi Mimura, saying the yen's recent moves do deviate from what you might normally expect, particularly considering the rate differential between the US and Japan. Now, South Korea in particular took something of a beating yesterday. The Kospi was off pretty heavily at one point, ending up closing a little bit under 3%, but already signs that we might see those dip buyers emerging. SK Hynix in the pre-market already better by about 4.3%, Shery.
And you mentioned those rate differentials in the Japanese yen. We saw a little bit of a bump after those comments by the chief currency official, Mimura-san, overnight. Right now, still holding at that 154 against the greenback. You're seeing the offshore yuan also not doing much after gaining ground, both onshore and offshore in the trading session. We had the Bloomberg dollar index falling for the first time in 6 sessions. This despite strong readings of U.S. services activity, not to mention private sector job growth that boosted Treasury yields in the overnight session. The euro also holding steady, little change, but we are watching the Bank of England's rate decision, not to mention that President Trump is meeting with executives from Switzerland. We have more ahead on the Asia trade. This is Bloomberg. We do have breaking news out of Japan. We are getting the labor cash earnings, of course, very important data set for the Bank of Japan, rising 1.9% year on year, according to expectations. Real cash earnings adjust for inflation, and you get a contraction of 1.4%. And this is really the issue in the Japanese economy, with households reeling from that inflationary pressure. But what the BOJ will be watching very closely for its next decision is full-time workers' base wages. And we're seeing that cash wages from regular full-time pay is rising 2.2% year on year. The Bank of Japan wants to see it around that 3% level in order to be comfortable in hiking rates, Paul.
Let's take a look at how Robinhood shares doing after hours. They're off about 1.5% at the moment. Robinhood did have a third quarter profit beat. Net income up 271% to $556 million. Crypto revenue, however, did fall short of estimates. That was even though it jumped 300%. So the market was expecting quite a bit there. But Robinhood shares a little bit softer after hours. Let's get more now. Bring in Bloomberg Tech co-anchor Ed Ludlow in San Francisco. Ed.
Yeah, thank you, team. And believe it or not, you find me downtown at an in-person earnings call of all things, where not just the institutional sell side participates, but the institutional buy side, the retail buy side, and Robinhood's customers. They all got to pose questions to Vlad Tenev, Robinhood's CEO. There's a lot of emphasis on October. Strong third quarter, got that. October. So I think the best place to start is take us through the lens of your customers. What was happening in October? The underlying trends, the behaviors that you're seeing.
I mean, first of all, thank you for being here with us in person to celebrate retail investors being a big part of the financial markets. October has been a continued strong month. I think you noticed Q3 was particularly strong. You know, record net deposits, record trading revenues, revenues across the board. Prediction markets have also been on fire. Right. So what you're seeing is continued sustained engagement, powered by the Robinhood flywheel. More customers, deeper engagement, more gold subscribers, bringing more assets, and the trading volumes have continued to increase as well. So it's just been strong across the board, I would say. There's not one area that's particular outlier, but continued strength across the board.
Markets are a tailwind for Robinhood, right? And so my question is, what is and where is the natural embedded hedge if markets turn on you, change direction? What happens?
It's a good question, and we try not to get so hung up on output metrics like trading volumes, right? Because trading volumes, as we've seen in the past, do tend to fluctuate with market activity. That said, what we look at is our market share. And we know that, you know, even though trading volumes can go with markets and can go up and down, long term, we're huge beneficiaries of both the growth in the US economy and also the generational wealth transfer, where north of 100 trillion of assets and wealth is going to be handed down from older generations to younger generations. These younger generations are folks that are digitally native, tech savvy. They don't particularly want to do their finances at brick and mortar institutions in person, and they really value user experience and cost. And so I think we track our market share, which has been growing pretty much across the board, across every asset. We're now up to $1/3 trillion in assets held at Robinhood, right, which has been extraordinary in terms of growth as well. And then there's these secular tailwinds of, you know, the U.S. economy still remains the hotbed of innovation. It's the epicenter of AI, electric vehicles innovation. And I think young people are going to be the generation inheriting all of this wealth. So Robinhood's really at the center of this.
Of young people and generation that's driving what you're seeing in prediction markets. I don't want to recount the data too much though, but just in the month of October, contracts and predictions have eclipsed what you did in the entire third quarter. So maybe talking about some of the underlying trends and activity would give us a better understanding of who's driving it and what's happening.
Yeah, that's right, Ed. I think the interesting thing about prediction markets is it rounds out the offering and sort of like completes the time at which Robinhood customers can continue to engage with the platform. For a while, we were offering predominantly U.S. equities, which was very much a U.S. East Coast working hours type of event. Markets are open, 9 to 4 East Coast hours. And then we've expanded that over time with us introducing 24-hour market. We've added crypto. And now prediction markets, a lot of the events, particularly in sports, are happening nights and weekends. So Robinhood is becoming increasingly a 24/7 platform where you can trade and invest in global markets at all times of the day. And I think our customers do tend to be digitally native and quite savvy. That tends to lean younger. But we also have customers that are, in their 70s and 80s. And as long as you're comfortable doing your finances on a mobile device and you want to be at the frontier of technology, I think it's something that transcends just young people. Of course, we always want to be relevant to the next generation. But Robinhood, I feel like you should be at a disadvantage if you're using any other platform. I think that's increasingly the case.
You believe your competition is sleeping on this a little bit, right? That you think you can build the financial super app for an entire family, multiple generations, to participate in different products and categories. Why have you got an advantage in going after that?
Well, I think that nobody has our combination of product depth and product velocity. So, we have a lot of products. We still have a huge amount left to build, but if you think about what we offer now, I think we have the best banking product out on the market that's being rolled out. I think we have the best credit card with 3% cash back on all categories that just passed 500,000 cardholders and $8 billion in annualized spend. We've always been strong across investing and trading, and now retirement as well. 25 billion of assets that customers are entrusting with us in retirement accounts. That is a big number, and this is like very serious long-term money. I think we have the best digital advisor with Robinhood Strategies, where every other advisor charges you more the more money you have on the platform. Robinhood Strategies inverts that model, and once you get to 100,000 managed, everything above that has no management fee. So the incentive is actually to grow with us, and we want to make it a no-brainer to have all of your assets onto Robinhood.
This is very much targeted at the individual. You have a 10-year plan where within 10 years you want more than half of revenue to come from the institutional side and from international markets, not just the United States. So what's the roadmap to get there?
Yeah, I think that somewhat paradoxically, you might not expect this, but
that's
the
why
roadmap,
I ask. It is paradoxical.
Well, the roadmap is really continuing to build for retail for the time being, because when we talk to our institutional potential customers, actually a lot of them are in this room, and they've come up and they said, we would love to use you guys for an institutional offering. They might be using a legacy provider where they can't trade 24/5, or they're not getting good stock loan rates, or the margin rates are not good. And pretty much nobody has a unified offering between crypto and traditional assets, which I think is being increasingly valuable. So the things that we're offering to retail, rock bottom margin rates, great user experience, 24-hour access to all markets, are things that institutional wants as well. And I think for the time being, we're in this great position. We have so much to do on retail that we want to stay very focused for that. But we have been building out our institutional business with Bitstamp, which is now, was the 10th business line to get to above 100 million in annualized revenue. Prediction markets being the 11th. So I think before long, you'll see that really continue to accelerate and become a bigger chunk of what we're offering.
Vlad Tenev is the Robinhood CEO, and as he just pointed to, prediction markets also hit 100 million annualized revenue, and I think run rate-wise, 300 million. There's a lot of focus on that right now. I'll send it back to you guys over in Asia.
Great to be with you.
All right, thanks very much, Ed. That's our Bloomberg Tech co-anchor, Ed Ludlow, there in San Francisco. We have more ahead on the Asia trade. This is Bloomberg.
Japan's Vice Finance Minister for International Affairs says he's confident that Tokyo's $550 billion U.S. investment pledge will also benefit Japanese companies. Atsushi Mimura was a key member of Japan's trade negotiation team, and I asked him how satisfied he was with the U.S. trade deal.
I would say that is probably the best thing that we can do realistically. I mean, I don't say 15% is marginal. Of course, 15% tariff or reciprocal tariffs or sectoral tariffs is something big. But can we expect for something better in the current situation? I don't think so. And we should also remember the fact that Japan is the only one country who didn't lower tariffs on our side. I mean, you have many other jurisdictions who did a trade deal with the United States, EU, Korea, other Asian countries. All of these countries are somehow lowering the tariffs on their side as well, which is not the case for Japan. And the reason was quite simple, because in Japan, in our legislative system, if you would like to change the tariff ratio for whatever single kind of goods, you need to go to the parliament and you need to get the legislative changes. But under the minority government, under this current political situation in Japan, we did not think this is really feasible in the current political situation in Japan. We thought, even though we present to the parliament the legislation that lowered the Japanese tariffs in response to US-Japan trade deal, whatever it is, we didn't think we could get the approval, majority approval of the diet. So we said to the United States colleagues, we will not lower the tariff. And we actually got this trade deal, even though we didn't lower the tariff on Japanese side.
But you had to pay $550 billion in terms of U.S. investments.
I don't think I'm paying. I'm just investing. And I'm really thinking so, because, again, this is an investment in the various sort of projects. And all these projects somehow engage with Japanese companies, because this $550 billion is basically financed by JBIC, Japan Bank for International Cooperation, or it's funded by commercial banks loan, guaranteed by Nexi Nippon Insurance, Nippon Export Insurance. So, and both for JBIC and both for Nexi, the legislation, the JBIC law or the Nexi law says, all the projects supported and financed by JBIC or Nexi should benefit Japanese companies. All these 550 billion projects will be the business for Japanese companies.
But the projects themselves are chosen by the Trump administration, and then the Japanese get to decide whether or not you want to be in that project.
No, the president will select the project following the suggestion of the investment committee, which this investment committee will make suggestion to the President Trump following the discussion at the consultation committee. And the consultation committee, it clearly says in the MOU, the consultation committee consists of both sides, both Japan and United States. And the consultation committee will provide inputs to the investment committee, which makes a suggestion or proposal to the president. The investment committee provides input from legal and strategic perspective. These words are important because legal perspectives, it means if we cannot do something according to Japanese law, we don't do it, we don't take it. So again, as the JBIC law clearly specifies that all the projects financed by JBIC should benefit Japanese companies.
Given the mechanism, you're not worried about triggering higher U.S. tariffs?
Not at all, not at all. Because we will do the consultation through the consultation committee in equal footing basis with the U.S. colleagues, and the project will be chosen from there. So all the projects that will come out of the president, from our perspective, this is something already that had been consulted between the two sides, Japan and U.S. So it's very, very unlikely that we will say no to joining in that project, despite the president's choice, because the president's choice, again, comes after the consultation between the U.S. and Japan.
How busy will the consultative body be if the investments need to be made within President Trump's term ending January 19, 2029? South Korea got a safeguard that investments would be capped at $20 billion annually. We do still have to see the MOU finalized, which you, of course, went into the details. Should Japan have had some sort of safeguards like that?
I did not think we need that, because with the big size of the Japanese, or U.S. dollar, Japanese yen foreign exchange market, with this size, and also with our size of the Japanese foreign reserves. With all this information, I did not think we need to receive or set that kind of safeguard. So I don't think we need it.
Japanese Vice Finance Minister for International Affairs Atsushi Mimura speaking to me at the Bloomberg Global Credit Forum. He's also the top currency official here in Japan, and he said that the Japanese yen is deviating when it comes to considering the U.S.-Japan rate differentials. Let's actually discuss this and bring in Bloomberg senior FX and rates reporter Ruth Carson. We continue to see the incredible pressure despite a risk-off session, not really a lot of support coming from the Japanese yen on those haven moves. How are traders looking at the currency right now?
Absolutely, and I think you nailed the topic on the head there when it comes to the fact that over the past 24 hours, we have seen some really big risk-off moves, with stocks under pressure in the past 24 hours. And yet, if you look at where dollar-yen is, there was a small bid pretty much for the yen. Now, in previous times, previous eras, if we can say that, the yen would have had a much bigger bid. So what exactly is happening? Traders are definitely debating this. At 154, it is still incredibly weak, and it's much to do with the fact that the Bank of Japan is slow in raising interest rates. But traders are just not buying into the fact that the BOJ is doing quickly enough to raise rates, and as a result, we are seeing yen under pressure.
Ruth, tell us a little bit more about the JGB auction yesterday as well. The 10-year note auction drawing some pretty tepid demand. Any broader concerns here about the health of Japan's bond market?
Absolutely. For macro traders looking at Japan, whether it's the yen, whether it's JGBs, things appear to be under pressure. Now, remember, we did see treasuries getting a healthy bid yesterday in the Asian trading session. Same with Australian government bonds, New Zealand, and Japan had a small bid. But yet, when the auction came in, we saw that the bid to cover ratio was down. Investors are still very skeptical here about owning Japanese debt. And again, this used to be a preeminent haven. Don't forget that JGBs are an anchor to the rates world. And so that's definitely sending, a signal to traders out there that, hey, you know what? Japan is actually quite risky right now.
All right, Bloomberg senior FX and rates reporter Ruth Carson there. Get you some breaking news out of Singapore at the moment. We just had some results from UOB. Third quarter net income coming in at 443 million Singaporean dollars. And net interest income, meanwhile, 2.27 billion. That was right in line with estimates. The net interest margin that's ticking down a little more than expected at 1.82%. UOB also setting aside 615 million Singaporean dollars in preemptive general provisions. All right, let's get more ahead on the Asia trade. This is Bloomberg. Tesla's been making waves at the China International Import Expo, although other American car makers seem to have reduced their presence at this year's event. Let's go to Shanghai now, and our Chief North Asia correspondent, Stephen Engel, who's there on the ground. So, Stephen, Tesla back in China. What are they showcasing?
Yeah, so later this morning, this area right here will be absolutely packed with people here at the CIIE because Tesla is back. Granted, their market share has dwindled over the last few years. They used to have about 16% of the market, but they haven't rolled out really any new models out of their Shanghai Gigafactory. They have the Models 3 and the Model Y, but they need to recapture the buzz because the competition, the domestic players, like we profiled Siri yesterday, which took over the #1 spot in luxury luxury EVs last year and the first 9 months of this year. Tesla did not participate last year at the CIIE here in Shanghai, and they did not participate in this year's annual auto show in China. So they've been kind of missing from the market because they've not had new models. What they've brought here for the first time is, as you can see over my right shoulder, the Optimus humanoid robot, as well as under wraps here, the Cyber Cab, part of course, Elon Musk's big plan in the United States to start, but elsewhere with their robo-taxi fleets. Now, the Chinese also going big on robo-taxis, as evidenced by the 2 listings we're going to get in Hong Kong today, Pony AI and WeRide. So Chinese cities are already rolling out not only test pilot zones, but full autonomous robo-taxis with paying customers. So again, it's debatable who's leading this race for robo-taxi infrastructure, but being the China correspondent here, I've seen a number of different real-world examples. So it is sort of Tesla versus the Chinese competition, and it's going to be a heck of a fight here as Tesla also tries to get full approval for its full self-driving FSD autonomous driving software here in China. Coming up here at the CIIE, we have a lot of interviews later today and tomorrow, including Lululemon China MD San Yang Ng and also AmCham Shanghai President Eric Zhang. Lots of coverage coming from Shanghai today and tomorrow.
Our Chief North Asia correspondent Stephen Engel there joining us from Shanghai with all of that coverage and those conversations, of course. And take a look at how we're setting up for the market opens in Japan and South Korea. We're already seeing gains on the ASX 200 with materials and real estate sectors leading those advances. When it comes to Nikkei futures pointing to the upside, and remember, we had some downside pressure for the last 2 sessions, but the yen is now underperforming G10 peer, so we might get some a little bit of a boost perhaps on those exporters. We did get a little bit of a boost on the yen overnight when we heard from the chief currency official talking about yen moves deviating from what might be expected from U.S.-Japan rate differentials, but that really not sustained. You can see U.S. futures also extending those gains after we saw the resumption of gains in the overnight session with that tech sell-off halted and those semiconductor names, chip makers, the Philadelphia Semiconductor Index, in fact, jumping about 3% as we're seeing a little bit more optimism over tech. The market opens in Seoul and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens after we saw that rebound on the Wall Street session. Paul, we had that dip buying after that tech sell-off. We also had a little bit more optimism on the trade side after the U.S. Supreme Court was a little bit more skeptical about President Trump's tariffs.
Yeah, some interesting questions around that. The Chief Justice wondering if it's an imposition of taxes upon the people, and only Congress can do that as well. Had a lot of earnings out of the US as well, which supported that positive narrative. Qualcomm, Snap also had some encouraging numbers, and we heard from Robinhood earlier as well with that third quarter profit beat.
A lot of earnings here in Japan as well. We will be watching Toyota after results disappointed. We'll be watching also the movement of the Japanese yen and the Nikkei and the topics after 2 sessions of losses already. And you can see Japanese stocks coming online to the upside of more than 1% for the Nikkei. We were watching the 10-year JGB yield as well after that tepid 10-year auction yesterday. The yen holding at that 154 level. But what we were watching were also comments from the top currency official here in Japan, Atsushi Mimura, in our Global Credit Forum last night, talking about a deviation when it comes to these currency moves. Take a listen.
If you look at the recent movements of the Japanese yen, US dollar, basically we always tell that you should always look at the interest rate differentials between the US dollars or US Treasury bond and the JGBs. But if you look at the actual movement of foreign exchange and also the movement or differentials between the US and Japan interest rates on public bonds, you do see some sort of deviation in recent weeks or even in recent months, I would say.
The yen has been under pressure after the BOJ left rates steady last week. And of course, very important for the BOJ, the fact that wages have come in line with expectations, growth of 1.9% for the month of September. But take a look at South Korea coming online, gains of more than 2%. Of course, we'll be watching those tech names around SK Hynix, around Samsung. We've seen incredible really pressure in the past week. We got the current account surplus, also the goods trade surplus widening, and the Kospi rebounding from its worst day since August of last year, and the Korean won seeing a little bit more pressure after falling to the lowest since April, Paul.
Yeah, well, following that rebound and yesterday's flight to safety, let's take a look at how bonds are tracking at the moment. We did see yields ticking up a little in the US session, about 7 basis points. Right now we've got the 10-year yield at 4.1562. A little bit of softness for the 2-year yield as well. We saw the dollar climbing. It's testing its 200-day moving average for the first time in a year now. And we also had a little bit of data in these data-sparse times as the US shutdown grinds on. ADP data saw US companies adding 42,000 jobs in October. That was a beat, and something to consider there for the Fed around what's more concerning. Is it jobs or is it inflation? So some encouraging news there on the jobs front. Just watching Brent crude edging a little lower at the moment, 63.52 a barrel. Of course, oversupply and soft demand concerns continuing to weigh on the oil market. All right, well, let's get a little bit more perspective on markets. Get to our next guest. Mark Matthews is head of Asia Research at Julius Baer. And Mark, as anticipated, we're seeing something of a rebound for Asian stocks at the moment, particularly around the AI story as well. So I just wonder what you made of all the events of the past 24 hours. Do you feel that AI is in a bubble or not? Because, of course, we heard from OpenAI's chief financial officer saying there needs to be more exuberance around this product. Do you buy this dip?
Paul, first of all, I don't think that there's going to be a big correction, so I'd rather be a buyer on a big correction. Unfortunately, we're not going to get one. We are invested and we're overweight stocks, so we're just fine the way we are. On AI and the technology stocks, of course, the concern is that they're overspending because they realize in any transition to a new technology, the incumbent companies are rarely the incumbents in the future. If you just think to cell phones, that Nokia and Ericsson were the big leaders, and they don't make smartphones. So the concern is that companies are overspending, and Meta's CEO Mark Zuckerberg said we'd rather risk misspending a couple of $1 billion than be late to superintelligence. With AI, I do think it's a big and real thing. I just think that it's impossible to know what it's going to look like. Just like in the early 90s, you might remember, we really didn't know what the implications of the internet will be. But I'm sure it'll be accretive and positive for the economy.
Yeah, and to your point, even after the dot-com bubble, the internet didn't go away. So with that in mind, how do you approach the AI trade when you're looking for names? Which ones stand out to you as the soundest long-term bet?
Well, I mean, I know I just sounded like I was being critical of Meta, but I think it's interesting because it's corrected a lot since the third quarter and since that guidance, and it's now on around 20 times forward earnings, which is below the S&P 500 itself. And I think they'll probably tone down that very aggressive CapEx guidance on AI spending next year because they saw what happened to their share price. But if you take that away, all of the data in the third quarter exceeded expectations. It's clear they are monetizing AI, and the forward guidance in terms of revenues I thought was very good. So there's one. I mean, it's going to take a while to heal the wounds, but I'm pretty sure the share price will be higher 12 months from now than where it is today.
Mark, when it comes to valuations, of course, the concern is that the increase has been really fast, right? Especially if it's going to trigger warnings from, say, the Korea Exchange on SK Hynix, because that stock gained 240% this past year. What are the concerns around Asian names, and could they still be fine given that, relatively speaking, compared to U.S. peers, valuations are not perhaps as stretched despite the recent rally?
Oh, Shery, absolutely. I think the technology stocks in Asia, by the way, I'm embarrassed. You always ask me about Korea, and it's probably the market I know least. So I've got to do some homework next time I come on the show. Yeah, certainly the Chinese AI names or the Chinese technology names like Baba or Tencent, as you know, they are much cheaper than their U.S. counterparts. And the AI story is different in China, but it's very real nonetheless. And I think the exciting part about AI is more on the automation and robotics side in China, where they're just becoming even more efficient and productive in manufacturing than they already were by implementing artificial intelligence.
Mark, I mean, even if you don't do any homework on South Korea, I really love your insights anyways, because, of course, we are very much watching all of these names and the incredible rally that we see in that market. And I'm just back from APEC, where the entire focus was on artificial intelligence and building that ecosystem. You mentioned China, of course, but how much of a problem will be that other sectors of that economy are still under pressure? Of course, we're talking about property, we're talking about corporate distress in different segments of that economy.
Ironically, I think it's a good thing because the government does not want this, what Nomura economist Richard Koo calls balance sheet recession. They have one. It's real. Asset prices are going down. Companies and households are feeling poorer. They are not spending. They are deleveraging. So interest rate cuts are not getting the economy going again. And I think what they're doing is they're revisiting a playbook that former Prime Minister Li Keqiang tried back in 2014, which is basically to get companies and households invested in a rising stock market so they become, or at least they feel wealthier that way, and that gets the juices flowing. Now, when they tried that in 2014, it got out of hand. It turned into a big bubble. We know it burst, and it actually ended up damaging sentiment. Now they have a lot more experience in it. The national team is much bigger than it was 10 years ago. I think they can control a steady bull market of about 10 to 15% per year in the stock market, and that is, they won't come out and say it explicitly, what they're doing to try to get the economy, headed back in the right direction. So ironically, sorry to answer your question in a roundabout way, Shery, I think the fact that the economy is weak, I know it sounds strange, but it's actually positive for the stock market.
Mark, before we let you go, I just want to get your views on the Fed as well, because, of course, we're in a rather data-poor environment as the US government shutdown drags on into its 36th day. But we did get a little bit of data today. Those ADP jobs numbers were beat. So when you run your eye across encouraging jobs numbers and sticky inflation, why would the Fed be looking at easing in December? What are your thoughts?
Well, Paul, the number the ADP came up with for October was 42,000, which it's positive, and that's good because September was negative. But I wouldn't call that a really hitting the ball out of the park kind of number. So I think it still allows them to cut rates. And of all the things that Chairman Powell said at his press conference when they met most recently, what interested me the most was that he said the Fed thinks tariffs are responsible for about 0.5 to 0.6 percentage points of the 2.9% core CPI inflation. In other words, if you strip tariffs out, the inflation rate would be about 2.3 to 2.4%. And I think that's, as good as you're going to get to, as close as you're going to get to 2. I think they should be fine and happy with that. So I think inflation's not an issue, and the ADP numbers were good, but they weren't so good that the Fed can't cut again.
Mark Matthews, always good to have you with us, head of Asia Research at Julius Baer there. And take a look at how SoftBank is trading. We had the latest from ARM giving a bullish forecast pointing toward more demand with artificial intelligence. Not surprising there. We continue to see that exuberance. The latest to comment on that was the OpenAI CFO, that in fact there should be more exuberance over this technology. And we saw ARM now really posting that bullish forecast, especially when it comes to the data center build out and the demand they're seeing from that sector. Of course, SoftBank, a big stakeholder of ARM. Take a look also at some changes on the MSCI All Country World Index. 69 additions and 64 deletions from the index, and these are some of the names that have been added and deleted from Japan. We are seeing, for example, Kyokusha Holdings, JX Advanced Metals being added, Meiji Holdings, Nissin Foods being deleted from the MSCI All Country Index on a day where we are seeing broad upside across Asian markets. More ahead, this is Bloomberg. The U.S. Supreme Court is signaling skepticism of President Trump's global tariffs, with key justices suggesting he had overstepped his authority.
The vehicle is imposition of taxes on Americans, and that has always been the core power of Congress. So to have the president's foreign affairs power trump that basic power for Congress seems to me to kind of at least neutralize between the two powers, the executive power and the legislative power.
Let's bring in our senior editor, Derek Wallback. Derek, how significant is it that some of that skepticism actually came from the conservative majority in the High Court?
Yeah, Shery, that's exactly what I was noticing as well. You know, the Supreme Court is a 6-3 court, 6 justices appointed by Republicans, including 3 by Donald Trump himself, to 3 justices appointed by Democrats. And we did see some skeptical questioning from at least 3 of those more conservative jurists about whether or not Donald Trump had overstepped his authority in levying sweeping tariffs across most of the global trade sectors, friends and foe alike. Now, there is not yet an indication of what the Supreme Court is going to do. They're going to take deliberation over the next weeks to possibly months. This is a decision that could come potentially later this year. It could also come later than that. But it really does have an awful lot of potential scope here. Now, not every single one of the president's tariffs are at stake, but quite a lot of them are. You could be talking about, if there is an adverse ruling, potentially $100 billion or more in federal refunds that would have to get paid out to businesses. There is not really a great way to do that. It could be a process that would be very messy, involving paper checks paid out over a long period of time. It's not really clear how the government would do that. Donald Trump saying in a recent interview that such an adverse decision would be, quote, devastating. He has said that the tariffs are not just a good tool financially, not just a good tool as an economic policy, but have been an invaluable tool as a leverage item with which to strike all of the trade deals he has been trying to do. So no mistaking here, this is possibly the biggest Supreme Court decision that he has faced so far in his second presidential term, and it is aimed potentially squarely at his biggest foreign economic policy.
Derek, we've also got a shutdown in the US now, dragging into day 36, and it looks as if flights may soon be impacted. What more do we know?
That's right, Paul. We're just weeks away from the Thanksgiving holiday here in the United States, which is one of the biggest travel holidays of the year. It's comparable only, I think, globally to Chinese New Year over in Asia, and it is really a time when everyone sort of gets into the skies. And just weeks before that, the FAA is talking about a potential 10% traffic slowdown to 40 key airports. Now we're waiting to see exactly what that might entail, which airports, which airlines, which routes, etc. But any sort of change like that is going to be something that would have potentially major consequences here. Now, the shutdown is at a record level. There have been difficulties in airports with air traffic control, etc., being able to staff appropriately. Now, we've seen ground stops everywhere from JFK to Washington D.C.'s airports, and major airports across the United States. So the consequences, as we've talked about on this show many times, right? A shutdown starts at medium bad and gets worse. And now we are at the longest one in American history. It is getting worse day by day, and there's not yet an end in sight, although we do hear that there are some mid-level talks ongoing, but just nothing close yet.
And Derek, before I let you go, we're seeing a reaction to the U.S. election results. President Trump himself reacting to that historic result in the New York City mayor election that we saw with the victory of Zoran Mandani.
Yeah, well, I mean, look, the center of American capitalism is going to be led by a self-described democratic socialist. That's the highlight race from the night. But as you look through from California to New Jersey to Virginia to Pennsylvania to anywhere you want to name on election night, Republicans broadly got routed. And I noted that some of when I looked deep into the results, as election nerd that I am, I noted that some of the biggest swings away from the Republican Party were in places that were uniquely touched by some of the president's decisions. You know, Donald Trump had a very aggressive posture at the start of this shutdown, talking about trying to cancel some programs in blue states, one of those being a major transportation project going into New York City for New Jersey rail commuters. Those commuting counties, the biggest swings that we saw in New Jersey as Mikey Sherrill was elected governor there, the Democrat. So you see this sort of all across the map. And even though Democrats, you've got pragmatists to a democratic socialist, they were all sort of united around this idea of affordability. And we're hearing the White House now in the hours since saying they are going to be talking a lot more about affordability walking into the midterms, because this was a wake-up call for Republicans and the White House.
All right, Bloomberg senior editor Derek Wallbank there in San Francisco. Well, OpenAI CFO Sarah Fryer says markets are overly focused on anxiety about a possible bubble in the artificial intelligence sector. She told a tech conference in California that investors should show more exuberance about the technology's potential. Now, one AI-related deal to watch today, Apple said to be close to a deal to use a Google AI model to power the overhaul of its Siri voice assistant. Let's get the details now from our tech correspondent Annabelle Julius. So, Belle, how's this tie-up going to work?
Yeah, well, it's a really interesting deal that's been signed, what we're hearing, and getting closer to being finalised at least. But just to sort of step back and look at exactly why Apple needs to work with a third-party provider, and the perception and the reality really is that Siri and Apple's AI efforts in general have been very much behind the competition. We've seen several high-profile deflections, for instance, to companies like Meta. So we knew that they were looking to work with a third-party provider of some sort, and we've been reporting on this over the course of this year. But some of the names in contention, so there was Anthropic's Claude, for instance. There was also ChatGPT from OpenAI. And what we hear from sources is that they've finally settled on teaming up with Alphabet's Google Gemini to roll out and integrate into their Siri voice assistants. There's a slate of new features that are being planned to be rolled out from next year. We do understand that both of the companies are, again, still hashing out the details of this, but they are moving forward to some sort of accord here. The goal here is really to try and build up Siri's underlying technology. As I said, there's that perception and the reality that they're very much behind in this space. This is, though, supposed to be an interim solution, because we know that Apple generally has a preference to develop technology in-house. They still are working toward that, but they do need to work with an outside party for a time being. What else we know is that it's certainly an acknowledgement, at least from the company, that, again, they have fallen behind in that race in AI.
Belle, when it comes to the sovereign race over AI supremacy, we heard from NVIDIA CEO Jensen Huang, and he thinks that perhaps China might have the upper hand.
Yeah, this was some pretty stark comments or punchy comments that we got from Jensen Huang in an interview to the FT. So we know, of course, the race between China and the US. It's very tense, and it's very competitive between the two countries as well. Jensen Huang has really been at the forefront of talking about this in the US because his own company, NVIDIA, we know has been restricted from selling its most advanced technology to China. His argument against that has been always that the more you restrict China, the more you will enable its rise rise, and now he's saying that China's actually in a position where they're going to be winning the AI race. There's two reasons that he's looking at this for in particular. The first is the regulations, and he's looking at individual states in the US that are making regulations around AI. He's very much pushing back on that. The other part of this that he's looking into is the energy side, and he's also talking about how China really has put itself into a position where it can offer really low-cost energy to a lot of its major businesses.
Well, Belle, you're down there at the Hong Kong Exchange. A couple of big listings today. We've got Pony AI, WeRide as well. How much interest is there?
Yeah, well, Paul, I think there's a lot of interest. I think probably you just started to notice even during the last few minutes that we're seeing a lot more people coming through the doors here this morning. It's going to be a really busy morning down at the Hong Kong Stock Exchange because if you can see, there's actually 4 gongs behind me on the stage today. But 2 of those are WeRide and Pony AI. Of course, they listed first in the US, but they're also listing again here in Hong Kong today. And so these are 2 of the major robo-taxi companies in China. There's 3, but these are 2 of them. And what we're expecting from both of these is one of them, that's Pony AI, has raised the most. It's raised more than 800 million. WeRide's around the 300 million mark. In terms of the subscription or the demand, we've seen pretty strong demand, at least in the retail side for the Pony piece. WeRide as well, looking at sort of using this funds to also continue to build out its international expansion efforts. So really great interviews we've got coming up because we're managing to speak with both of the CEOs of these companies. So we'll bring more details on that because, of course, it's also interesting to note there's very fierce competition between these 2 companies in particular.
All right, Bloomberg Asia Tech correspondent Annabelle Drew is there at the Hong Kong Exchange. We've got more ahead on the Asia trade. This is Bloomberg. Let's get to some other tech stories that we're tracking. Snap shares rose in late trading after it announced a $400 million partnership to roll out Perplexity's AI search engine to Snapchat users globally. Perplexity's product will become the default search tool inside Snapchat starting from next year. The announcement was made alongside Snap's third quarter earnings, which were largely in line with estimates. Qualcomm was given a bullish forecast for this quarter, saying sales would be roughly $12 billion as demand for high-end Android chips remains strong. The chipmaker's profit took a hit last quarter from a US tax change, resulting in a net loss of more than $3 billion. The company is working to transform into a more diversified seller of chips for cars, PCs and data centers. And ARM shares gained in extended trading after the chip designer issued a bullish revenue forecast, the company expecting fiscal third quarter sales to reach $1.23 billion, surpassing the average analyst estimate. More in a moment. This is Bloomberg. Day on Sydney Harbour and a nice set of trade numbers too just coming in for the month of September. A big rebound in exports, 7.9% growth, reversing the 7.8% contraction that we had back in August. Imports rising by 1.1%. That's a much slower pace of increase than we saw in August as well, where we had a number of 3.2%. The trade balance coming in pretty much in line with expectations, just a shade over 3.9 billion Australian dollars. The expectation was for a $4 billion rise. So a healthy set of trade numbers there. We got the Aussie dollar little changed, 153.74. Shery.
Paul, here in Japan, we're also digesting the cash labor earnings that came out earlier in line with expectations growth of 1.9%. Of course, we're watching it very closely for what the Bank of Japan might do next. And you can see that the yen weakness continues at that 153 level against the U.S. dollar. A little bit of a pop, perhaps, towards 153 against the greenback. But this, of course, after incredible weakness that has sent it past 154 already earlier in the week. We actually heard from Japan's top currency official, Atsushi Mimura, talking about U.S.-Japan rate differentials and the impact on yen moves. Take a listen to what he had to say at the Bloomberg Global Credit Forum.
If you look at the recent movements of the Japanese yen, U.S. dollar, basically we always tell that you should always look at the interest rate differentials between the U.S. dollars or U.S. Treasury bond and the JGBs. But if you look at the actual movement of foreign exchange and also the movement or differentials between the U.S. and Japan interest rates on public bonds, you do see some sort of deviation in recent weeks or even in recent months, I would say. Two aspects. The first thing is that we are always looking at some sort of speculative movements in the market, and of course, because of the government shutdown in the U.S., we don't know the figure after end of September, but if you look at the trend until mid-September, since the beginning of this year, the accumulation of yen long dollar short position has been quite accumulated until sometime this year, around by the time of the summer. But since then, this position is gradually or even rapidly shrinking. And I assume in the recent weeks, probably it has further shrinked because of the different sort of events happening not only in Japan but also around the world.
Which means we could see more pressure.
So, of course, as the yen long dollar short position is shrinking, definitely it goes on the direction of the further depreciation of yen, of course. So this movement is one thing. And another thing is that, yes, as the responsible public officer, I should refrain from making any sort of too much detail or too much assessment, but we do recognize that many people say in the market that there is also some speculation or prospects about Japan's macroeconomic policies, especially fiscal policy. And so probably in the recent weeks, probably there is some prospect or speculation in the market about the forthcoming fiscal policy in this country. But of course, this is only part of the whole story because anyway, we have many other elements, including the geopolitical things and trade policies, etc., etc. For example, in September, fortunately, we came to an agreement with the U.S. with regard to Japan-U.S. tariff negotiations. So this is already one big deal that also affects the market.
Japanese Vice Finance Minister for International Affairs Atsushi Mimura, and joining me here in the studio is Hideyuki Sano, a Bloomberg senior stock reporter. And of course, I was trying to get Mimura-san to talk about what the logic is behind when officials intervene in the markets, right? And I mentioned that his predecessor, Masato Kanda, for example, thought the rapid moves in the yen meant a 10 yen move within a month. He did not go into details. But what do investors think?
At the moment, very few investors think that there will be imminent risk of intervention by the Japanese authorities. New Finance Minister Satsuki Katayama has said the yen's move was one-sided, which is a strong comment, but important code word here is a decisive action. When they talk about decisive action, then people get more nervous about immediate risk of intervention. No one has said that, at least so far. Excuse me. So at the moment, there's limited chance of intervention, but if the yen weakens further, then I'm pretty sure many investors will be more nervous.
No, it's really interesting because I also was trying to get the level. So I was telling Mimura-san we're watching the 160 level, and then he was like, well, you were watching 150 earlier. I mean, this idea that the officials will intervene if the moves are too disorderly. What have we been watching so far, especially given that we also have to consider where the BOJ is going, right?
Yeah, exactly. In the stock market, I think many people are looking at 155 because last year when the yen weakened beyond that level, the topic stopped outperforming the S&P index because of worries that there might be interventions. And if the yen weakens to 160, then I'm pretty sure there'll be very extreme nervousness about policy actions because that's the level where last year they intervened, and also it increases the chance of the BOJ raising rates earlier than expected. And so 155 and 160, those are the levels many people are watching. And for stock market, usually a weaker yen is a good thing for stock market because it lifts the value of export earnings, etc. But increasingly, if the yen weakens beyond the current levels, any boost from the weaker yen will be getting weaker and weaker. That's what a lot of investors are thinking at the moment.
Hideyuki, what's priced in so far in terms of the next move from the BOJ?
At the moment, there has been limited changes. So one rate hike by March, but December rate hike is still more or less 50 and 50 at this point. But the Tokyo CPI data we had last week was actually very strong, and some economists argue that that indicates a more urgent need for the Bank of Japan to move ahead with a rate hike earlier than expected. Now, of course, we just have a new government, and a lot of analysts think that there'll be more communications between the BOJ needs to communicate more with the government. So we still need to see, but depending on the currency moves and the upcoming inflation data, we could see more bets on the rate hike in December.
All right, senior stock reporter Hideyuki Sano there. Let's get to the top corporate stories that we're tracking today. DBS has posted higher than expected quarterly profits, supported by sustained momentum in its wealth management business and robust trading income. Singapore's largest bank says net income fell 2% from a year earlier. Lenders and the city-state are facing a margin squeeze as interest rates decline, but that's being cushioned by strong money flows from the rich. Rival UOB missed third-quarter profit estimates as it set aside $470 million to guard against banking sector headwinds and buffer for allowances on corporate accounts. And that saw net income fall 72% to $339 million, which was far below the average analyst estimate of $1.7 billion. The bank says share buyback and dividend commitments, though, are going to remain intact. National Australia Bank's full-year profit narrowly missed expectations despite growth in its key business and private banking division. Cash profit dipped 0.2%, even as key units posted solid growth. CEO Andrew Irvine says the bank is focused on boosting deposits and home lending as it heads into the new fiscal year. Shery.
Paul, Netflix may be missing a golden opportunity to cash in on its surprise mega hit, K-Pop Demon Hunters. Fans won't be able to get their hands on merchandise, including action figures, dolls, and plushies, until after the holidays. Bloomberg's Chris Palmieri leads our media and entertainment coverage and joins us now from Los Angeles. Chris, I mean, this was a surprise even for me because I kept being told to watch it, and I just thought it was a silly animation. It was really, really fun. So I guess we won't get our hands on for the holiday season when it comes to these toys?
Yeah, this kind of snuck up on everybody. Came out the end of June. Normally, the way the toy business works is toy makers present their toys to retailers in February. They place orders. Stuff gets made in China or whatever, gets on the boat, and it just takes months to get things in time for Christmas. There's some products out there. You can find T-shirts, some Halloween costumes, and that, but the bulk of the toys won't come till next year.
Chris, to what degree was there sort of nothing in place here? Does Netflix have any arrangements with retailers?
They tried. This isn't unusual. We've seen this phenomenon before. Even if a hit like Frozen was totally. If you remember, 10 years ago, the parents were trying to find the blue dresses for their daughters and things like that. Even a company like Disney gets caught sometimes by a surprise hit. But the important thing for Netflix is this is their real first major kids franchise. A cartoon that they can replicate again and again. There's already discussion of a sequel coming out in 2029.
The song Soda Pop is from K-Pop Demon Hunters, right? Because I have that ringing in my ear right now. Chris, what's on the pipeline right now for Netflix then?
Well, in terms of this, I mean, you can certainly see the merchandising of this. They've been expanding into areas like they're opening attractions in malls and that tied to their intellectual property. So you probably could see something like that come before we see the K-pop sequel. Probably they're going to use this as an opportunity to look at other properties that they can sort of use some of the momentum they're having, whether it's live events, all kinds of things tied to this franchise.
All right, Bloomberg's Chris Palmieri there on Netflix and those K-pop Demon Hunter toys. Not going to make it for Christmas by the looks of things. Let's take a look at how Asia markets are tracking in the meantime. Got a bit of a rebound going on as we were anticipating. We've got the Kospi now better by 1.3%. SK Hynix had a very wild ride over the past 24 hours. It's now strongly positive after yesterday's AI concern-related sell-off. We got the Nikkei also better by 1.5%. Here in Australia, the ASX also pushing higher. We got more ahead on the Asia trade. This is Bloomberg. The bonds of the embattled developer China Vanke slumped this week after its state-owned shareholder Shenzhen Metro Group pressed it to secure earlier loans with collateral. Bloomberg opinion columnist Shery says this is reigniting a debate that Beijing would rather have buried. Shery joins us now from Hong Kong. So, Shery, what's the plan here, and is there any risk of default for China Vanke?
There is, and the bond investors, they have two different camps. One camp says basically that they believe that in China there is no too big to fail, right? Like we have seen Evergrande, China Evergrande and Country Garden, they were much bigger than China Vanke. So that camp basically thinks that Vanke is a big black hole that no bailout can help. Basically this year, Vanke's contracted sales is expected to be down 40% according to Bloomberg Intelligence, and they are staring at a 100 billion yuan cash shortfall. On the other side of the camp, some investors believe that Beijing just does not want to create more economic instability, and another SOE, perhaps not Shenzhen Metro, another one of Shenzhen's state-owned enterprises will come in and help Vanke out a little bit.
So, Shery, the property downturn in China has been going on now for 5 years. What has Beijing been doing so far, and have these measures worked at all in diffusing this, what we're calling a time bomb at this point?
Well, I think at this point, Beijing basically just wants to tell you there's nothing to see here. They have tried different half-baked rescue methods, right? With China Vanke, for instance, we all know it's a very troubled name, but Shenzhen Metro only has 27% stake. They're not willing to basically consolidate China Vanke into their own balance sheet. And in terms of property market rescue, they basically a year ago, like if you look at the political bureau meetings, they will say China aims to stabilize the real estate market. This kind of language has disappeared this year. If you look at the policy meetings, the top language is always about technology, innovation, AI, etc. And the government just doesn't want to deal with it. But this problem has not gone away. Home prices have not stabilized. Property sales are way down from a year ago.
And the fact that the Shenzhen government doesn't necessarily want to support Vanke at this point, or could be more reluctant, is this a reflection of broader issues in this sector, and what can we expect next?
I think absolutely. Vanke is turning into a very big gaping hole, right? Like they have a lot of bonds due this year and next, and their sales are way down. I think like Shenzhen government is probably talking to the Guangdong or the central governments right now and try to find a solution. Again, it's going to be like a bandage put on a very big wound.
Bloomberg opinion columnist Shery there talking us through the property downturn ongoing in China. And these are some of the other global headlines that we're following at the moment. China rolling back tariffs on U.S. farm goods and lifting export curbs on American firms. It moves tied to a new trade pact with Washington. The Finance Ministry will drop levies on soybeans, corn, wheat, and chicken starting November 10th. Beijing is also removing 25 companies from its trade control lists after the U.S. eased its own tariffs on Chinese imports. Bloomberg's being told that Cambodia will store part of its gold reserves in China, becoming one of the first nations to use Beijing's new bullion vault in Shenzhen. The deal marks early progress in China's bid to challenge Western dominance in global gold storage. Cambodia's central bank holds about 54 tons of gold, roughly a quarter of its $26 billion in foreign exchange reserves. President Trump reportedly appealed to China's Xi Jinping to free Hong Kong media mogul Jimmy Lai during their meeting last week in South Korea. Reuters cites sources saying that Trump spoke about concerns for the health of the jailed publisher. Lai has been detained since 2020. He denied charges under national security laws of a conspiracy to incite foreign sanctions against Hong Kong and China. Take a look at how futures are trading at the moment. Of course, we have been following the yuan that's been gaining ground offshore and onshore. This as we have the dollar also losing ground for the first time in 6 sessions. China's 10-year bond yield also hovering near the lowest in more than 2 months. This after the PBOC said it purchased debt in October. Chinese robotaxi firms Pony AI and WeRide also will be have tumbled in gray market trading. So do watch out for their Thursday debut on the Hong Kong Stock Exchange. We have more ahead on the Asia trade. This is Bloomberg.
The Mayor of Melbourne, Nicholas Rees, says cities have a critical role to play in implementing the goals set out by world leaders gathering in Brazil for COP30. Rees spoke with Bloomberg at the COP30 Local Leaders Forum, co-hosted by Bloomberg Philanthropies in Rio de Janeiro.
Cities and regional subnational governments have a very important role to play in climate action, in fact, an essential role to play. I know at a city level, we are the level of government closest to the people. We see problems first. We feel it on our streets. We see the challenges of air pollution causing 7 million premature deaths globally. We see the impact that heat is having. In my home city of Melbourne, we estimate it's costing our economy $200 million a year. We call it the silent killer. Again, thousands of premature deaths. We see the impact it has on our economy in terms of changing agricultural output and output overall. So I think that climate action is such a multifaceted global challenge. We need everyone to be all in, national governments, regional governments, and city governments. I think cities in particular have a special role to play. As I said, we are the innovators and the implementers. We have an ability to move more quickly than other levels of government, to try new policy interventions, and if they work, great, they can be scaled up to a regional or national level. If they fail, hey, that's fine. They fail fast in one city. And we're also the implementer. So quite often, these big, grand national targets or global emissions targets ultimately translate down to street level action on our streets, neighbourhoods and cities, and it's the cities that are doing that. So I think there's a really critical role there.
What do you say to people, maybe your constituents, who roll their eyes at gatherings like this, at COP30, sort of wonder what it is, what it actually leads to? What tangibly can you get out of a gathering like this one? What can you bring back?
Look, I think that climate action is such a huge global challenge that we are all in this together, and having leaders get together and compare notes, compare ideas, work out what's working, what's not working is absolutely critically important. I know I've been here the last 3 days talking with city mayors, talking to cities just like mine, and working out, what new things are they trying, what can I take home to Melbourne, to Australia, and that's invaluable. It's not easy to make change in a modern world.
That's the Lord Mayor of Melbourne, Nicholas Rees, there speaking with our colleague David Gura. Okay, let's take a look at our commodities tracking at the moment. We've still got iron ore holding on above $100 a tonne. Materials stocks are performing the best in Australia at the moment. Gold also backing off a little bit, but it has steadied, seeing its biggest gain in about a week. We did get some reasonably encouraging private sector payrolls data out of the United States as well, so just hovering below that $4,000 an ounce mark. The oil price still pretty soft, though, $63.52 for Brent. Those oversupply and soft demand concerns continuing to cast a shadow over the market, Shery.
Paul, despite the pressure on commodities, we're seeing the broad ASX 200 gaining ground right now, about 0.5%. In fact, all of Asia right now, we're seeing that risk-on sentiment, with Japan gaining more than 1.3%. Do watch out for some names like Toyota after their annual profit guidance is appointed. Nippon Steel also forecasting a net loss, and you can see the Kospi also rebounding 1%. In the next hour, as trading gets underway in China, do look out for the trading debuts on the Hong Kong Stock Exchange of Pony AI and WeRide, of course, China's robo-taxi firms, really in a fierce competition. They have raised a combined $1.9 billion for that trading debut and their first-time share sales. That's it from the Asia Trade. Our markets coverage continues. The China show is next. This is Bloomberg.